In my 7 years in crypto, I've lost over $500,000 because of different mistakes. The biggest losses? $200,000 on bad risk management in 2023, $80,000 from emotional trading back in 2022, and around $200,000 on various scam projects and failed altcoin investments. The most painful lesson was when I lost 80% of my portfolio overnight in 2022, trading with leverage right before a Black Swan event. I thought I understood the market, but one piece of news wiped out months of progress. That's when I learned that in crypto there are no safe assets. 95% of beginners lose their deposits within the first 6 months. Why? Because they come into crypto expecting to get rich quick, without understanding the risks. They trade emotionally, they skip stop losses, they follow guaranteed strategies, and they don't realize that crypto isn't a casino. It's a complex financial market that takes years to truly understand. And no one really talks about the fact that 90% of crypto influencers don't make their money from trading. They make it from ads and selling courses. Most successful traders only show their winning trades. No one tells you about whale manipulation, how exchanges trade against their own clients, or the real statistics showing how most retail traders lose money. -1. Emotional damage. Let's talk about how the constant stress of crypto volatility affects your mental state. The non-stop swings from euphoria to depression slowly destroy your nervous system. I developed anxiety and insomnia. When you see your portfolio change by 100,000 in just 1 hour, it creates chronic stress that bleeds into every part of your life. These days I actually sleep fine because I follow proper risk management and more importantly, I've learned to stay calm about loss. By back then I couldn't sleep peacefully with open positions. The market runs 24/7 and while you're asleep anything can happen. I used to wake up every 2 hours just to check my trades. The Asian session can completely flip the market while Europe is still asleep. It turns your nights into a nightmare of constant worry. When you lose money because of manipulations, technical glitches or scams, you start seeing conspiracies everywhere. Every price movement looks fake, every piece of news feels like manipulation. I even started thinking my own actions were being tracked and used against me. -2. Unpredictable losses. It's instantly easy to lose 80% of your portfolio overnight. All it takes is trading with high leverage during unexpected news. When China banned mining in 2021, Bitcoin dropped 50% in just a few hours, and all my leveraged long position got liquidated. Or when FTX collapsed. The entire market crashed by 30% in a single day. In crypto, nothing is truly safe. Doing DCA into so-called reliable altcoins led to 90% losses. Staking supposedly stable tokens ended with their completely collapse. Even keeping funds on trusted exchanges ended in a disaster with FTX going bankrupt. Unpredictability is part of crypto's DNA. In traditional markets, one mistake might cost you 5-10%. In crypto, it's your entire portfolio. Forgot to set a stop loss? That's -50%. Used too much leverage? Liquidation. Trusted the next big project? It's scam. The market doesn't forgive mistakes, it punishes them as harshly as possible. -3. Manipulation and whales. Big players in the market deliberately liquidate retail traders. They can literally see the liquidation map. They know exactly where retail trader placed their stop losses and they push the price right toward those levels to grab liquidity. Then flip the market in the opposite direction. I've seen it happen hundreds of times. The price moves perfectly toward the cluster of stopped orders, breaks by around $100 and then immediately reverses. Even technical analysis often fails because of this manipulation. Whales know exactly where retail traders place their entires and stops based on those same TA patterns. They intentionally break support and resistance levels to trigger panic or euphoria. Classic chart patterns only work until they are used as a weapon for manipulation. I have personally witnessed countless pump and dump scams. I've seen random altcoins skyrocket 5000% in just 1 hour, with no news at all, only to crash 90% within 10 minutes. Coordinated groups on Twitter would hype up the token, create massive FOMO, and then dump their bags on retail investors. This was especially common with meme coins back in 2021. So how can you tell natural price movement from artificial manipulations? A natural move has consistent volume, a gradual progression, and a fundamental reason behind it. Artificial moves are sudden spikes with low volume, moves against the overall market trend or news, and strange, unnatural chart patterns. But honestly, it's getting harder and harder to tell, because the manipulations are becoming more and more sophisticated. -4. The market never sleeps. You basically become a hostage to the market. You can't go on a date because you have got an open position or a project you need to claim right now. You skip family events because it's an important moment on the market. Your friends stop inviting you anywhere because you are always glued to your phone. Relationships fall apart from constant stress and lack of attention. Why is it impossible to truly relax when you have open trades? Because something critical can happen at any moment. You're lying on the beach, but your mind is thinking about Bitcoin crashing. You're at the theater, but you check the price every 10 minutes. Rest stops being rest. It turns into a constant tale of anxiety about your position. But here's the thing, it all gets easier with experience and a proper understanding of market psychology. I'll be talking about that in more detail in one of my upcoming videos on this channel. -5. Addiction to news. One single piece of news can wipe out months of profitable trading. When Elon Musk tweeted that Tesla would no longer accept Bitcoin, the market dropped 20% in just 1 hour. All my long position got stop losses. A whole month of steady profits disappeared in 60 minutes because of one tweet. But honestly, it was my fault. I took on too much risk at that moment. Why is fundamental analysis often useless in crypto? Because the market doesn't move on logic, it moves on emotional and speculation. Solid projects with their real world value can drop 90%, while worthless memcoin pump 1000% up. Fundamentals only matter in the long run, but most people can't wait for years, they want profits now. And then there is fake news and rumors, some of the biggest market movers. A single rumors about Amazon accepting Bitcoin pushed the price up 15%. Then it turns out to be fake and the price crashes right back down. Fake headlines about bans, approvals or partnership constantly fuel volatility. The market always reacts first and only checks the facts later. -6. Hidden fees and taxes. When you're actively trading, fees can eat up around 15% of your profits. Trading fees of just 0.1% might seem small, but after 100 trades per month, that's already 10% of your total volume. Add withdrawal fees, conversion fees, spreads and slippage, and from a 10,000 profit you're realistically left with about 9,000. What other hidden costs exist in crypto trading? Subscription for analytics platforms that cost up to $200 a month. Bank fees for currency conversion, 1 to 3%. Taxes that can reach 35% in some countries. Exchange rate losses when withdrawing to fiat. And even storage fees for hardware wallets. And then there is the tax side, a real nightmare for traders. You have to track every single transaction, calculate taxes on each crypto trade, and file tax reports properly. In some countries, every swap is taxable event. Penalties for unpaid taxes can exceed the profit themselves. Many traders don't even realize they are legally required to pay taxes on crypto trading. Why does profit on paper never match the real one? Because on paper you might made $50,000, but after fees, taxes, withdrawal costs and conversion losses, you are left with $45,000 at best. -8. The illusion of getting rich fast. Why are all those made a million in a year stories so dangerous for beginners? Because they only show success, hiding the thousands of failures behind it. New traders start thinking that's normal and they end up risking everything they have. They don't realize that behind every so-called crypto millionaire are years of learning, tons of mistakes and a huge amount of luck. It's pure survivorship bias. You only see the ones who made it. Expecting 1000% profits, beginners crank up their leverages and risk their entire balance. And when reality doesn't meet those expectations, they start chasing losses, doubling down to win it back. They think if I haven't made $1 million yet, I must be doing something wrong, and end up making even riskier decisions. To actually become profitable in crypto takes at least 2-3 years of consistent learning and practice. Most people blow up their first account within 6 months. The next year is spent just learning risk management and another one building emotional resilience. And that's only if you're learning from your mistakes, not repeating them. What were my most naive expectations? I thought I could make my first million in a year. I believed technical analysis had 80% accuracy. I even believed I could completely control my emotions. All those expectations shared within the first few months of real trading. And here is hidden psychological traps. Crypto turns even irrational people into gamblers. The constant access to trading, extreme volatility, and endless stories of overnight millionaires trigger the same pleasure counters in your brain as a casino. Every winning trade gives you a hit of dopamine, and that's how addiction starts. Rational decision making gets replaced by emotional impulses. Even highly successful people lose money in crypto. Doctors, lawyers, engineers, people who crushed it in their own fields often blew up their crypto accounts. Why? Because success in one area doesn't mean success here. Crypto demands specific skills, proper risk management, emotional control, and an understanding on market psychology. And that's actually what I teach on this channel, so make sure to subscribe. What are the most dangerous cognitive bias for traders? It's confirmation bias. You only see information that supports your position. Overconfidence. You overestimate your skills after a few lucky trades. Loss aversion. You refuse to close a losing position and ride it all the way down. FOMO. You buying at the top because you are scared to miss out. To avoid these psychological traps, keep a trading journal, analyze every single trade, and set clear rules. Then stick to them no matter how you feel. Use stop losses to remove emotional decision making. Take regular breaks to reset your mind. And of course, keep watching my channel so you can keep your mindset as sharp as your portfolio. Now, myths vs reality. Here are some of the biggest crypto myths that turned out to be completely nonsense. HODL always works. Not true. Many altcoins have dropped 99% and never recovered. Crypto is future of money. After 7 years, it's still not a mainstream payment system. I personally use crypto cards everywhere and rarely cash out to fiat, but most people still don't. Blockchain will revolutionize everything. Most use cases turned out to be inefficient or necessary. Bitcoin is a hedge against inflation. It crashed right along with stocks. Why doesn't the HODL strategy always work? It works only for Bitcoin and Ethereum in long run. For most altcoins, it's a straight path to losing 90 to 99% of your capital. Many promising projects from 2017 are now worth nothing. HODLing requires iron discipline and the mental strength to survive 80-90% drawdowns, something most people simply can't handle. Crypto marketing also manipulates investors. Fancy white papers full of empty promises, fake partnerships with big corporations, inflated LinkedIn profiles of team members. I have seen projects claiming they would revolutionize logistics, which turned out to be straight up Ponzi schemes. Their marketing budgets were 10 times bigger than their actual development costs. And honestly, most of the crypto industry's bold promises never came true. Think like mass adoption as a global payment method, cheap and fast transactions. Ethereum gas fees hit $100 at one point. Through decentralization, most projects are controlled by founders, replacing the banking system or saving development countries. Almost all of it was just marketing hype, not the real innovation. There are a few simple rules that can help you minimize the negative side of crypto. Never invest more than you can afford to lose. Set clear time limits for trading, no more than 4 hours a day. Always use stop losses. Diversify not only your assets but also your exchanges and wallets. And most importantly, regularly withdraw profits into real life. To find balance between making money and keeping your sanity, set loss limits for day, week and months. If you hit that limit, take a full break from trading. Stay active, work out, meditate, do something completely unrelated to money. Talk to people outside the crypto bubble. Keep up with health checkups and take care of your body. Stress in trading hits harder than most people realize. If I could give advice to my past self 7 years ago, I would say this: start with small amounts, learn risk management before you trade, don't believe in get rich quick, don't trade on emotions, diversify your exchanges, withdraw profits regularly, don't sacrifice your health or relationships for money, and above all, remember, this is a marathon, not a sprint. And finally, is it even worth getting in crypto at all? The truth is, the advantages of crypto definitely outweigh the downsides if you approach it wisely. Crypto opens up access to new ways to making money, financial independence, and cutting-edge technology. If you're willing to learn, grow, manage your risk, and only invest but you can afford to lose, crypto can become one of the best tools for building both wealth and personal freedom. In the long run, it gives you a chance to stand at the front line of financial change and profit from the opportunities that most people only watch from the sidelines. Crypto is for almost everyone, as long as you approach it smartly and responsibly. If you're ready to learn, follow proper risk management rules, and stop chasing easy money, you already have everything you need to succeed. More and more people are mastering this market, earning consistent income and using crypto as a tool to grow their capital. The key is simple: don't rush, analyze your moves, and keep evolving. Do that and success in crypto becomes not just possible but inevitable. Before getting into crypto, you need to understand one thing: this is a high-risk asset that can literally go to zero. 95% of traders lose money. It takes years of learning to reach consistent profitably. It will test your mental health and relationships, and government regulation can change the entire game overnight. You have to be mentally prepared for losses. Accept them as an inevitable part of the process. Decide in advance what's the maximum amount you're willing to lose. Study the stories of other traders, their mistakes, their failures. Build emotional resilience through meditation, exercise, hobbies, and structure. And always have a plan for what to do if you take a major hit. If you are willing to grow, study the market, apply proper risk management, and treat your investment consciously, crypto can become an incredible tool for building wealth and unlocking new opportunities. Even if you don't have a big starting capital, but you have curiously, persistence, and smart approach, you can absolutely succeed in this space. After 7 years in crypto, I released one thing: the market doesn't owe you wealth, but it will absolutely expose your weakness. Most people come into crypto chasing money and live with lessons. These lessons are expensive, but priceless for anyone willing to learn from them. Crypto isn't really about money, it's about who you become in the progress of earning it or losing it. So make sure to subscribe to the channel, register on the best exchange Bybit using the link in the description to get $30,000 bonuses, and start watching the next videos to learn how to make money in crypto the smart, systematic way.